The most common tax mistakes while filing taxes. Hey everyone, welcome back to my channel. If you're new, my name is CPA Dan Hodges. I am a 30-year veteran business CPA, and I've worked both at the big firm and probably 2/3 of my career as a self-employed CPA firm owner. Now my firm, we strictly specialize in family-owned businesses. I could say small business, but to be honest, some of the people I work with, they do exceedingly well. And when you're doing hundreds of thousands or millions of dollars of business, you don't like being told that you're small. But having said that, I do work with companies all over the spectrum. Anyhow, if you're new here, would you click that subscribe and follow button so that you can get post notifications? That way you won't miss out on some of the best tax tips for business. In today's video, we're going to talk about some of the most common applicable tax tips, both for tax filers and for professionals. Things you should consider while filing your taxes. Let's start with one of the most common mistakes, and that is failing to report all of your business income. Whether it's from your job, freelance work, investments, or side gigs, it is essential to report all of your earnings, every penny. Many people do not realize that the IRS receives copies of your income statements, your 1099s, your W-2s, and things like that. They definitely know that you have received the income. And if you do not report them, it will be one of the first reasons that IRS wants to get in touch with you. Another exceedingly common mistake is overlooking all the deductions and tax credits that you're eligible for. This is where hiring a professional can make a huge difference. Tax laws, they change every year, and sometimes they change multiple times in a year. It's challenging even for us as tax professionals to stay on top of, but we take a lot of continuing education. I just don't know how the average person could do it and do it well. You have, on the personal side, medical expenses, charitable contribution, you have education costs, you have home office deductions, and a lot of different opportunities, frankly, to lower your tax bill. You also have things on the business side. People who are unincorporated are notorious for not deducting all their expenses. And perhaps it's because when you're unincorporated, the standard of bookkeeping and accounting that you have to have, it's much more relaxed. And if you don't keep any records, are you gonna remember to deduct all the things you did all year long? I mean, let's face it, when you're in business, you're busy. When you use a corporate strategy and have a very good set of books in an accounting, if you are careful and use a good process and best practices, everything that runs through the business accounts should end up on your accounting. And therefore, you're much more likely to capture all your expenses.